Hey everyone, and welcome back to Success Boost. Today we're talking about the dishonest downfall of Nikola Motors. Make sure you stay until the end so you don't miss out on how Nikola Motors fell to their doom. You'll be completely shocked. The underlying narrative for the electric vehicle market in 2020 has undoubtedly been Tesla's relentless rally, which recently culminated in the company being valued with a market cap at over $400 billion at its peak, more than time-tested names like GM, Ford, Daimler, and Fiat combined. Unlike Nikola, Tesla develops extensive proprietary technology, which cuts many traditional automakers and suppliers out of the picture. The astronomical rise in Tesla's valuation has pressured other auto companies like General Motors to unlock similar value from the ongoing EV wave. In August 2020, analysis from Deutsche Bank and Morgan Stanley pressed General Motors to spin off its electric vehicle business, stating that such a move dedicated to EV could be worth up to $100 billion. Nothing is off the table, GM CEO Mary Barra said at the time, appeasing analysis and winning a price target boost from Morgan Stanley shortly thereafter. The company has been backpedaling in the wake of September 12th, as was reported in the Hindenburg research report. As a short seller, the investor bets a stock will go down. Hindenburg had an incentive to bring out the worst aspects of the company. There are many. Most egregious, Nikola admitted it had staged a demo and shot video, Nikola One in motion, of the Nikola One tractor, the cab and propulsion system of an 18-wheeler rolling down a hill, seemingly under power. It was just rolling down a hill as trucks are meant to do when you take your foot off the brakes. Nikola's alternative facts explanation? Nikola never stated his truck was driving under its own propulsion in the video. It has been discovered that the Nikola was sourcing key technology from third-party suppliers, yet they claimed they were all in-house inventions. This is a huge concern. Power inverters that Nikola said it developed came from a company called Cascadia. The Nikola Tre tractor was a non-working Nikola One with H2 and zero-emission hydrogen electric painted on the cab, the Hindenburg report says. All of this led to the board of directors announcing a leadership transition. Stefan Gursky, a former vice chairman of GM and Nikola board member, was appointed chairman of the Nikola board. In just a few weeks, Trevor Milton had gone from being the youngest newcomer on Forbes 400 billionaires list to suddenly stepping down from Nikola Corporation, the electric and hydrogen truck startup that he started, amid allegations that the company is an intricate fraud. Trevor Milton made the move 10 days after a financial research firm that had taken a short position in Nikola, Hindenburg Research, issued a detailed and scathing report that alleged Milton committed several fraudulent acts to help the company achieve its $20 billion valuation. Nikola and Milton refuted the firm's allegations, but not all of them, and in one statement the company did admit it rolled a non-working truck down a hill for a misleading in-motion video ad released in 2018. The US Department of Justice and the Securities and Exchange Commission have both since opened investigations into the company. Milton said in a statement that Nikola is truly in his blood, and always will be, so the focus should be on the company and its world-changing mission and not on him. He continued to say that he made the difficult decision to approach the board and volunteer to step aside as executive chairman. Founding Nikola and growing it into a company that will change transportation for the better and helps protect our world's climate has been an incredible honor, he said. For Milton and Nikola, who just recently were respectively seen by many as the next Elon Musk and as the startup poised to jumpstart the necessity EV truck market, the move is a stunning reversal of fortune for them. Milton founded the company in 2015 to make hydrogen and electric-powered semi-trucks for long-distance hauling. It also unveiled the Badger, a passenger pickup truck that could get 600 miles of range on an FCEV/BEV battery blend and do 0 to 60 miles per hour in 2.9 seconds. For a brief moment this summer, Nikola emerged as the poster child for the new generation of EV startups, scoring huge Wall Street valuations on the heels of Tesla's stock price skyrocketing past every other car company. It went public with an SPAC, an old Wall Street tool that's big again in the electric car world, gaining a valuation of $34 billion early on. Things picked up from there when Nikola announced a strategic partnership and investment from General Motors earlier this month. From there, things quickly unraveled. While Hindenburg Research openly admitted a short seller position in Nikola, it alleged much of the company's so-called proprietary vehicle technology was not its own, that prototypes used in promotional materials were not actually functional, that the company exaggerated the number of reservations it currently holds, and that Milton's brother was placed in charge of building out the company's hydrogen infrastructure despite his most recent job being a contractor in Hawaii. Milton and his team have refuted Hindenburg's claims, but they did not dispute them all, and in the process, they've ended up raising more questions than they actually put to rest. GM on their part has said that the deal with Nikola is still underway, and that it did all proper due diligence on the deal before it happened. Though, as the Detroit Free Press and other outlets pointed out, the current situation is more of a PR black eye for GM than an outright financial risk, given the size of the investment. Nikola now has no option but to deliver on the deal and prove that it has a viable future, but it must do so without the man who started it all. If nothing else, the situation is further proof that the EV startup world is often built on shakier ground than Wall Street investors with dreams of easy Tesla-level money would like to admit. Making cars is hard. Earlier Wednesday, Nikola reconfirmed plans to build the semi-trucks in an announcement. It intends to test its battery electric Nikola Tre semi-trucks in Europe by the end of the year, followed by production in the fourth quarter of next year. The company also said that the construction of its plant in Arizona remains on track to begin manufacturing activity in 2022, followed by additional work on the facility in 2023. Nikola also hopes to partner with another company on hydrogen fuel cell stations by the end of the year, and break ground on the first hydrogen fuel stations by the second quarter of 2021. It also plans to start testing its fuel cell semi-trucks in 2022, with production beginning in late 2023. In contrast to making grand proclamations over Twitter previously, the coordinated press release and executive interviews are a new thing. It's something that investors should continue to expect going forward, according to executives. After the Hindenburg report revealed the false claims that Nikola Motors stated, JP Chase somehow reiterated its buy rating. This confirmed one aspect clear: Chase was in on the fraud. JP Chase owned Nikola stock and still owns it today. As a result, it would be in their best interest to issue a buy rating on Nikola stock for them to profit. Besides, GM gave a similarly one-sided response. GM CEO Mary Barra claims that she did her own due diligence and is now requesting more stake in Nikola. GM's stake in Nikola quickly fell from $2 billion to $1.1 billion. So of course the only logical decision from a greedy CEO's perspective is to obtain more free money. The fact that these major corporations are supporting an automaker that has already been proven to be a fraud truly shows the ethics of the underlying executives. Nikola's remaining executives still have a large stake in Nikola Motors that is worth millions if not billions of dollars. Funnily enough though, these executives are actually receiving more stock as a quote-unquote award for keeping the valuation of Nikola Motors at a certain level. Mark Russell, the current CEO, has received 600,000 shares that are worth $14.4 million as an award. In total, Mark has over 41 million shares of Nikola that is worth roughly $1 billion. Yes, you heard right, $1 billion. Kim Brady, the CEO of Nikola, has $7.6 million worth of stock as of this moment, and Britain Worthen, the CEO, has $7.2 million worth of stock. Yet this stock is worthless to them right now because they can't sell their shares until December 21st, which is when the lockup on their shares expire. Mark this date, December 21st, as all of these shares will come flooding out onto the market, and the valuation of Nikola will literally go downhill. All of these nuclear executives and large shareholders are desperately waiting for December 21st so they can dump their shares on the open market and run away with hundreds of millions of dollars. Nikola executives are employing another strategy. They seem to be staying away from the media after all. From a retail or institutional investor's perspective, if Nikola isn't on the media, then this means that they're focused on delivering. But in all honesty, this simply is not true. Nikola executives are waiting on their hundreds of millions of shares. Over the past few days, neglected attempts to silence online critics such as Sam Alexander and Tom Nash. Both of these YouTubers have received copyright strikes for using footage of the Nikola One in motion, despite the clip being used fairly. While you're here, go ahead and click on one of these videos on your screen. See you there!